events, right? We have it once every year, right? We had the one for last year, it was amazing, and this is the one for 2023, right? And it's gonna really bless you good if you pay attention, right? So as we head to this boot camp, I would like you all to just for this boot camp, right? Just forget everything you know. Just give a wrap attention. Sometimes the issue that many people have is that it's not like they don't, are not exposed to information, right? Some people are exposed to information, but their unwillingness to, be receptive becomes the issue. So I beg you all that in this boot camp, I know that most of you know one or two things, all those, you have learned one or two things in your trading journey and all of that, right? But just for the sake of this boot camp, right? Just to as much as possible, just pay attention, right? I'm not saying you should. As my network kind of went off. I said before we continue, just type where you're plugging on this call from. Let us know where you're plugging in from, like your location. Are you in Lagos? Just let us know where you guys are plugging on the call from. Let us see where are you guys plugging from. I'm plugging in from Cross River. Let us see where you guys are plugging in from. So where are you? Where are you? Where are you guys? Wow, Niger State. Wow, I thought we were at Kaduna. That's probably have moved. So this was at Kaduna, something of that sort. Wow, Ondo State, amazing. Welcome, welcome. Wow, Lagos. Wow, Nasarawa. Wow, Abuja, Niger. Wow, Osun State. Owerri. Wow, where is good? Wow, amazing, amazing. Abuja. Wow, amazing. Lagos, Lagos. Wow, Lagos goes to. It was at Lagos. I thought it was at Delta. Wow, welcome. All right, welcome, 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 welcome. All right, it's glad to have you all on this boot camp, and wow, Sapele Delta States, amazing, amazing. Anambra and Abuja, okay, possibly the case between those two areas. All right, wow, Abuja, wow, welcome, 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 welcome. All right, so it's glad to hear your location. I'm actually plugging in from Cross River, Calabar, yeah, Cross River State. That's where basically my family stays. What is this? All right. Did you add a new thing? What is this? Oh, this wow, Benue State. Wow, amazing. All right, so welcome to the bootcamp. So welcome to the bootcamp. So we'll start with today we have to talk about a reorientation to FOREX. Right? I'm aware that some of you guys are not really new to trading, right? So I must go and begin to talk about what is FOREX and all those things because it will not be beneficial to those of you that are not actually very new, right? But I will just kind of make it in a way that even those that are, completely new to trading, right, will also benefit, and those that are less that have been trading for a while would also benefit. So if you have been trading for less than 6 months, that means you have been to FOREX less than 6 months, just type some sevens. Let us know that's less than 6 months. So I can kind of know the people that are present. Right? If you have trading for less than 6 months, I type some sevens. Then if you have trading for more than 6 months, just type some eights. Right? So just type some eights if you have been trading for more than 6 months. Right? If you're completely new, you obviously now you fall into less than 6 months. So just type some sevens if you're less than 6 months into the FOREX market, and if you're more than that, type some eights. So that's kind of know the guys that are present on this course today. Wow, 7, Becky, less than 6 months. Are you kidding me? Wow, 8. I know they can more than. Wow, 8. Wow, 8. Wow, 8. Amazing, amazing. So we have a lot of gurus here, so I have to be really careful with what I say. Wow, wow. So I was typing 6. Is it 6 or 8? Wow. All right. Welcome to the bootcamp boy. So let's go straight to the point. Now, there are certain things that we need to know. We have to start with the reorientation to financial, the reorientation to forex parts, right? What is reorientation? It's like um, kind of reintroducing you to something in a proper manner, right? So it's kind of a reorientation service. So when we start with the reorientation part, reorientation towards forex trading. As some people just got into trading with a wrong mindset about trading. That has been the challenge that they have been having, right? This issue of their mindset, right? They are programmed wrongly. Let's assume that, for instance, right, maybe you come to, when I was in secondary school, there was actually a particular school that we know that they don't allow examination malpractice. That is their standard. So when you're coming to that school, just know that they're not going to be helping your exam. So the programming that you will have when coming to that school that is you're going to learn how to scale your exams on your own. So that is what we call program the orientation. So anyone that comes to that school has the orientation that okay, this school we don't help students pass their exams. You write on your own. Why there are schools where they help students to pass. So in those kind of schools, they will have this orientation that okay, we are going to be helped. There's no need to be serious, no need to really read so much. After I'll be helped. I just need to gather some money, and pay for the exam help. So that is what trading is about. Many of us we had wrong information when we came into the financial markets. Like for instance, when I joined forex trading, I didn't really join because I was broke, right? When I joined forex trading, I actually had money. Like I'm telling a lot of it. But I joined forex trading because I wanted a system to grow my funds. I needed something that I could be doing to grow the money I had. So for me, my initial orientation to the financial market was that I could grow my wealth. That was what I had. That was my own orientation. So I didn't get into forex because I saw someone driving a flashy car, just fast line. That was not my orientation I had. My own orientation was that I wanted to grow my wealth because I had money when I joined forex trading. While some of you, the reason you join is because you are tired of the kind of job you have. You want freedom and all of those things. So it's not actually wrong. But most times, the issues that we have had in the financial market is the gospel that is being preached to bring people into the financial market. Right? We have a lot of mentors that all they do is propagate this flashy lifestyle, right? This flashy lifestyle, that they can make $20,000 in a day, that you can buy a car in 6 months, a car of 100 million in 6 months, and that has actually been a problem. So when you come into the financial market, what you have in your mind is that you're going to have a car of $1,000 or $2,000 in 3 months, and that is actually one of the issues that many traders have. They were introduced into forex with a wrong note. That means their foundation have already been destroyed, right? So the Holy Book says that if the foundation be destroyed, what can the righteous do? So when you have this wrong orientation, like I said earlier, like those people that come to a school where they don't help them, already they have the orientation that they're not going to be helped. So they'll have to hustle and read and cram, go for night classes and all of that. So they have that orientation already that this school don't help students during exams. So the same thing that comes to forex trading. The issues that we have had is because of the kind of mentors that are out there. All right, we have a lot, the same way we have false prophets. Since we also have false mentors. Right, these are, for me, I feel that this is one of the biggest challenges in the financial market. We have a lot of false mentors. Right, this is actually one of the issues that I feel that has brought a lot of issues to the trading space. Someone like me, if you come and meet me, I would never sell you that gospel that you will get rich in 6 months, you will get rich overnight. I don't say those kind of things. That's why if you check my Telegram community, you never see me posting profits. You never see me posting houses or cars, although I drive cars, but you never see me posting all those things because I am not giving you that kind of orientation that this is going to be very easy for you, right? So I usually focus on teaching you, like most of what I post on my group. Eventually, see me, I'll post why I took a trade, the reasons. Like, for instance, you can check my Telegram group. Just I think I posted something a few moments ago, like my most recent trade. Right, you can see the how I got in, how I recorded my trade, and all of that. That is why I give my own orientation to forex. I always give you the orientation that you have to focus on the skill sets. That is what I feel that many mentors should be propagating. They should be orienting students that you get the skill first before you get the life you want. But what has happened that we have a lot of forced mentors which have done was propagated this lifestyle of it's going to be so easy. Just come and join my mentorship, join my signals. They're going to make it overnight. That has just been the issue with so many traders. So they have paid for all kinds of signal services. Now, I want to ask you guys a question. Now, let me just talk a little about mentorship. Mentorship is actually one of the additional streams of income for so many traders, right? For instance, now let us use for those that know Papa Jimmy's wife, that is Sweetness Cakes. I want to use that for an example. Now, if you watch, I've actually gone through Sweetness Cakes. That's Papa Jimmy's wife. I've gone through her Instagram community and all of that, right? She bakes cake for a living, all right? So, and she doesn't only bake cakes, she also trains people. So she makes income from two basic ways: baking and training. That's how she basically makes her income as a cake baker. She makes income from baking and training, and I feel that her major incomes come from baking, while training is just like additional, hustle. Now, that is the same way that it is in forex trading. So most traders, they make their income from trading and training. That's how I'm not going to break this enough for you. I want you guys to get this thing. So many traders, they make money from what? Trading and training, right? So they're also making money from trade. They're making money from what? Training people too, right? So now, let's use Sweetness Cakes for this illustration, all right? Now, she trains and she bakes, all right? Now, people come to register for her training because why? They can see her result. They can see how beautiful her cakes look. I've seen her cakes and they are amazing. Like, I'm like, how do people bake this kind of cake? I've seen some cakes that look like some like a football, some like as tall as, and I can't even imagine how those cakes are made, right? And that is the reason why people come to learn under her, and they are properly trained, and then they can replicate the same results. But the issue with these forced mentors is that they don't have the results, but they want to train, all right? So now, you cannot give what you don't have. So what they propagate is that come and join my mentorship program and you will make this. But they don't actually know what they're doing, all right? So you cannot actually show people the light when you don't even have the light yourself. It's just like, for instance, now, me, I don't know how to bake. Imagine me coming on and say, oh yeah, come and learn how to bake. All right, I will say, okay, the Elektron FS bakery session I've opened up. And you guys come and pay for baking mentorship, and you guys pay up. And I don't even know how to bake. So what do you think if I don't know how to bake? Is it possible that anyone among the people that registered under me will learn how to bake? It's impossible. There's no way that the people that registered to learn how to bake from me will actually learn how to bake, because why? I don't know how to bake. So the same thing happens with these forced mentors. They don't know how to trade, but they use trainings to generate income, right? And just give one shitty value, right? This has just been the issue with on the trading space, and that is why you need to be oriented. So you may have come across a forced mentor which has given you this guarantee that, okay, I had one. No, I've actually joined about just 3 mentorships before I actually got the hang of trading. And there was one that actually you would always post how he over leveraged, right, to make $1,000 in a day. And that was the reason why I paid for his course, because I saw how he was making $1,000 on his trade. Now, the issue there is that in his style of trading, there was no risk management. For me, I don't think that. In fact, for me, if this is how you know the forced mentors. Number one, these are the signs of a forced mentor, and this is why you need to right. Those are false prophets. So the signs of a false mentor, right? There are 2 signs. These are the 2 ways you know them. The false mentors. There are 2 ways you know them, right? Number one, they encourage poor risk management. This is how you know the guys that have messed up the trading space, right? They encourage bad risk management. So they don't encourage risk management. They don't encourage it. They don't tell you load up, stack, hold it when it drops. That is how you know them. All right. So I didn't mention any name. So I'm mentioning a name. I didn't mention anybody's name. So they encourage bad risk management. I didn't call anybody's name, so I typed someone's name. So the encourage was bad risk management. They encourage bad risk management. That's how you know them. These guys, they have money. So anybody that encourages bad risk management obviously have where to turn to. You understand? But if I had like $5 million now in my account, I wouldn't mind over leveraging on some things because I know that I still have somewhere to fall back to. But the issue that has come into FOREX is because you don't even have so much, and then you have accepted this belief system of bad risk management. It keeps telling you that. That's why you make $1,000 today, you blow $5,000 tomorrow. It's because you have been oriented in this bad risk management mindset. All right. I want to just use 35 minutes to talk about this. So the issue with so many traders is because they have, these are how you know FOREX mentors, they encourage bad risk management. I don't care what strategy they teach, this is how you know them. Any mentor that encourages bad risk management is what I call a false mentor and should be avoided. So these are the guys that are actually causing the wreck. The same way it's in the Christian, like the ratio of false prophets to real prophets are usually, like 450 to 1, according to what the Bible tells us. That is the same way it is in the trading space. You have a lot of false mentors in the trading space. That is why many people are struggling. They don't know what they are doing, and they're trying to and pay people to come to their training so they can make money off you. So false mentors encourage bad risk management. And the second way you will know a false mentor is that students do not have evident results. So this is how you actually know someone that you should not be learning under. They don't have, you can always use the student of a mentor to judge his progress. Go and look at, so if a mentor has 15 students, or let's say a mentor has 100 students, and out of the 100, only 2 are doing well, the rest of 98 are doing bad, it simply means that it's a false mentor. You cannot give out what you don't have. Right? Such as I have, I give one to you. Right? That is how you know a mentor you should be following. For instance, I follow ICT. Why do I follow ICT? Because I have looked at, for instance, now if you check on YouTube, you see a Paladin, right? The guy that withdrew $250K last year. He was acknowledging ICT as one of the guys that trained him. Someone like Honcho Mindset, that's the guy that I follow. He was trained by ICT. So I have a lot of traders that are doing what I was trained by ICT. That's why I follow him, because I have looked at his students. Like I said, they have a track record of what? Results. That's how you actually know a real mentor. You look at the students that he has trained. That's how you actually know them, right? It's not when the mentors only are making money, every person is not bring their account. That's how to know it, right? So these are the guys that you should be avoiding, the guys that encourage bad risk management, and the guys that their students do not have a sustainable thing to show for. For instance, today we had one of our, I think this week, one of our students at the academy, it only passed his Prof Fem challenge. All right, yeah, Hannah FOREX, yeah, I the product too, right? I have to know a real mentor. You have students. Bible says, by their fruits you shall know them. You have students that will be your fruits, and they can replicate your result. That's how you know a mentor you should be following, right? For instance, we had one of our students that had been with us for about a year, and that was, I think, Mr. Solomon. He passed his Prof Fem challenge. I think he tried 2 times, and this was the second attempt he passed it. And I asked him a question on the group: did I ever, give you any signal? Or he said no. That is how you actually know someone should be following. You can look at the students and you can tell this is actually what someone that actually has the result. All right. So such as you have, you can give on to others. So for Mrs. Sweetness Cakes, the reason why people are following her is because she has the result, and then she can train you to have a result. So it's not so. This is where you should be looking at. You shouldn't be looking at the profits being posted by the mentor. You shouldn't be looking at, for those of you that are new, stop looking at the cars and all those things. Look at this. This is how you know the false prophets, the false mentors. You know them by their risk management. How do they manage their risk? How do they? How are their results? What do the results look like? And finally, how you know them again is that number 3, they propagate a flashy lifestyle. So you actually know that they're always posting, how much they withdrew, their cars, their houses, but they never ever propagate teaching, right? You hardly see them having life course. You never see them having life course. You always see them saying, okay, I just made this $1,000, see my account, see this, my signal. You know what funny thing? This is why I hate signal services so much. You know, as most signal services, they are actually what they actually do, right? Maybe a trade, maybe the market is selling, right? The market is the market is bearish and the market is dropping, right? So what these false guys do is that, okay, the market is very bearish. Maybe the market is very bearish. You know, be like, okay, take a sell take a sell here. I'm trying to take a sell at this point. Put your stop loss all the way here. All right, put your stop loss here. So that's like 50 pips. So that's only stop loss. Now you can be like, okay, TP1, take your TP1 at this point here. TP1 here. TP2 at this point. All right, TP2 here. Then TP3. Yeah, TP3. And stop loss will be obviously bigger than TP3. Right? They'll be like, okay, let's say yes, TP1 hits, close some partials. TP1 hits, close some partials. Let's say yes, TP2 hits, accuracy, 90% signal. TP3 hits. Now, if you check this whole trade, what they actually gave you as a stop loss was actually more than the profit. So you're risking $1,000 to make 200. You're risking $500 to make 100. That is what has messed up the trading space. These false mentors, they propagate this slash lifestyle. 90%. You know that you can be profitable without having even up to 40%. That means you take 10 trades, you lose 6 and win 4, and you see profitable. Do you know that you don't even need to have up to 50% win rate? For me, my win rate is between 40% to 46. That's my analysis. That's my win rate. I actually win trades between, if I take 10 trades, I win about 4 and lose 6. Or like I say, loss and break even 6. Then I win 4. That's how my win rate. And I see profitable that way. But these guys, they'll tell you 98 points, 99.9% win rate. We don't, and check it out. It may be true, but their risk to reward is poor. And do you know that if you're risking you risk $1,000, right? Maybe you risk $1,000, right? This is a bootcamp, right? You're here to break the fallow ground. That's the theme of the year, breaking the fallow grounds. I want to break all those things that has become a problem in this trading space, all right? So if you're risking $1,000, right, and your TP and your that is why I robbed myself. Imagine the influence I had. Imagine that I had a signal service, all right? There's no way that 15 people will not be registering for my signal service at least a month. Imagine 15 people pay me $20, even if it's $10 per person. That's $150 sure every month. But I don't do all those things. Why? Because those things actually create traders that are bound to fail. Like prophesy, like there's a seed on that they're going to fail. They are going to fail. So not as much as you risk $1,000, right, on these ticket services, right? You risk $1,000 to make based on their TP1 to 3, to make 300, right? So now you risk $1,000. Okay, TP1 was $100, TP2 was $200, TP3 was $300, and you risk what? Look at your stop loss, more than that. So now, if you win, let's assume that you win about 4 trades back to back, right? You win 4 trades, let's assume you win 4. So if you win 4 trades, you're upwards, you have made what? 1,200, right? You have made 1,200, right? 90% win rate, you have done what? You have made this. Now, supposing this trainer goes against you, okay, you now just lose just one loss, right? You now have what? Minus 1,000. So this is what these guys do. This is why I hate so many of these Instagram guys. In fact, one of my New Year resolution was to delete Instagram. I've never gone to Instagram this year. I deleted my Instagram app on my phone because a lot of falsehood is being posted there. And I don't want to be part of it. So I have to delete my Instagram. I only use Facebook, Twitter, and Telegram and WhatsApp sometimes. So imagine you finally lose a trade. So you have won 9, you have won 4, and now you have finally lost 1. You now lose 1,000 because of the signal service. People 1, 2, and 3. It's not up to what your risk. You now lose 1,000 on your single trade. Right? So now you now lose 1,000. What are you left? You have only 200 left. Now you have what? 200 left. Now imagine that you now come and do what? You now lose another one. So now imagine that you now lose the second trade, maybe because of the emotions. Maybe you have suffered to make all this, and now finally lose one now. And you now lose another 200. So you now have 200 minus 1,000. Right? So now This is not a convenient. This is not the regular boot camp that you guys know. They're going to teach you what is FOREX. I don't have time for that. What is FOREX? Go and look at baby tips. Right? No time for that. We want to go into the meat. Right? Imagine, yeah. So now, if that man lose again, what he has got? He has got minus $800. So this is what he has left. And remember, he won 4 trades and lost only 2. But it's a negative of what? Minus 800. That is what has been the problem with so many traders. You have to look past all these 1, 2, 3. That is the orientation that keeps you doomed to fail. If you want to break your life from that doom to that damnation to fail, you have to reorient yourself. Look past this flashy lifestyle. Look past this risk $1,000 to make 200. That's not how to be profitable in trading. All right. So these are the things I need to reorient. Like I needed to drum to your heads, right? That is it. And the work that that's what so many mentors do. They don't post flashy things to get subscribers, to get all those things. YouTube will be paying them, their broker will be paying them, they'll be getting members for their brokers. Like, we have what's called affiliate platforms where you bring people to your broker, like Infinance. We have what they call affiliates. You bring people, you post flashy lifestyle, use their money to buy cars. See, most Instagram mentors, the money they make is not from trading, it's from all these trainings, advertisement. They don't make it from trading. Because how can you be risking $1,000 to make $200 and you profitable? It's impossible. Marketing anyway. You cannot be profitable when you have a bad risk content. It's impossible. Impossible. We even had one, I think last year. After the profit, just I don't to talk about it. He lost heavily last year at December. I was like, this is it. This is what I'm talking about. Flash lifestyle. All right? So these are the things we need to drum to head. And, maybe when they hear this things from me, that is why many people will not like me. They don't want to follow me because I am not going to propagate the thing that tickles your fancy or tickles your emotion. I will tell you the truth. And the truth is that Forex trading is not like this. This is not what you should focus about. So now, what should you be focused on? What is that thing you should focus on? What are the things that you should really be focused on? Right? You should focus on learning the skill. Like every profession, these are the things you should know. So you have to have these are the proper mindset about trading. These are what I want to reorient your mind. So the proper mindset about trading, right? So now we have been able to establish that one of the reasons we struggle in trading is because of the wrong orientation that we had, because of the people that we met, the first mentors that we encountered, and the things we have done in the past. So the proper mindset you should have about trading is that, number one, it is a career. And like every other career, it takes time and work. So I studied petroleum engineering in school. It took me 5 years to graduate from school. It took me 5 years. So you have to know that trading is a career like every other. We have people that are professional traders. Like even in Nigeria, we have people that trade for banks. We have people that trade for banks. We have people that trade for banks, like big banks, IBTC, UBA. People that trade for them. That is what the banks use their money to do. The banks, they use their money to do forex trading. Let me not say they do about it. They use their money to trade. Most of the banks. They have people that trade for them. Financial markets, they trade for them. So you must know that forex trading is a career. And like your medicine, your law, your whatever, you have to approach this from that constraint. Please give me a moment. Let me plug my part. All right, let's go. If you guys are following on this call, just type. If these are getting value, just type value. Just type value in the comment section. Let us see. Just if you're getting something, just type value in the comment section. Let us know that you're getting something. Wow, amazing. Shush. Let's go. So this is it. So the proper mindset you should have is number one, it's a career, and like every other career, it takes time and work. You are not going to be profitable overnight. You're not going to. It takes work. I don't know any doctor that from his year one, he started treating patients and making money. If I've never seen a doctor that in his year one, he went and got a job, and as he was learning, he was also making money from his doctor profession. It doesn't happen that way. Every career has a time in which you have to do what? You have to sacrifice and learn properly. So trading is a career. You want to be a trader, know it's a career, and you need to take your time. And the same way it took me 5 years to get a bachelor degree in engineering, it's the same way it's going to take me time. So, to gain ground in the financial market. It's actually a career. It's a career. That's the things you should know. Another thing that these guys would not tell you, you never hear it's a career. They will never say, just join my mentorship program. They're going to make it in 3 days. Just look at my team. We made $15,000 last during the news, right? We just made $15K during the news. Join my team. Pay for my mentorship program. Join my signal service. We made 1,000 pips last week, and we can't wait to have you join us. What are you sleeping on? Are you sleeping on a bike? All those stuff, What also they do? But the one thing is a career and it takes time. I've had guys that come to ask me, please, I want to join your mentorship program. Do you give signals? I tell them, no, I don't give signals. And they walk away. I don't really care. I'm not sent to everyone. I'm sent to the people that want to be serious. I work with people that want to be serious. If you want people to spoon feed you, now go to the next person, right? So that the thing you should know about number 2, it takes time. Number 2, Forex is a skill first before profits endeavor, right? So you must focus on getting the skill first, right? Now, I said something on my Telegram community. If you're not there, I will share the link to you guys. But I said something. I said that there are 2 kinds of progress. What was called the visible progress and the invisible progress. When it comes to forex trading, the invisible progress is where you are learning, right? And being able to understand the markets, At that point, you will not have any profits. And why many traders get it wrong? They believe that just because they're not making $1,000, it means they're not progressing. That is wrong. They have what we call the invisible progress. And it's not visible. You cannot see it with your eye. That means your bank account might not necessarily change. Your trading balance might not necessarily change, but you're still progressing. So the invisible part of forex trading is where many people actually give up on, because they believe that since they're not making ends meet, then they're not progressing. It's wrong. So you have to know that forex trading has 2 kinds of progress: the invisible progress and the visible one. So the invisible one comes with learning about yourself, all of those stuff, all those fun stuff. So the visible progress, that is the one you can see, usually comes after the invisible progress. So the invisible progress comes before the visible progress. That means the skill, right, usually comes before the profits. So the skill is the invisible progress, and the profit is what we call the visible progress. People can withdraw it. It's something you can spend. All right. So it's something you need to understand. So you should find out what is something you should learn. Like, you have to learn how to perform a surgery properly before you can pay on it. You start with a cadaver before you go into a real human being, right? So you have to get a skill first before the profit start to turn itself. All right. So that is a proper mindset. So if you're coming to forex trading, you have to know that, all right, let me focus on the skill. If possible, leave live trading. Just focus on the demo accounts and all of that, right? So it's a skill stuff. And finally, I want to go over to the next thing. We are taking 5 minutes already on this part of the call. So the final thing I want to talk about is that forex trading. All right, trading. Let me say trading. Right, forex trading is a personal journey. Right, this is one thing you should know. It's a personal journey. So when you understand it's a personal journey, then there's no room for competition. Since let's assume that you're traveling to maybe Lagos through bus, and on that bus you are the only one in the car. There's no other car on the road. Doesn't matter that you're driving to Lagos. There's no other car on the road. It's only that is traveling. I mean, when you understand that you're the only one in the car, you wouldn't be competing, looking at other cars, feeling, it's a personal journey. So there's no point, trying to compete with someone else. Maybe someone made $1,000. You start to feel bad. You need to feel so bad because you didn't make $1,000. That doesn't make any sense. All right? You have to know that it's a personal journey. Your 30 kilometers cannot be my 30 kilometers. Madam Becky's kilometers cannot be Mr. Solomon's 30 kilometers. All right? So it's a personal journey. The fact that Mr. Solomon passed his performance challenge yesterday doesn't mean that he has gone ahead of others. It's just that based on his personal journey, he has come to a path in which he has reached the level of trading profit account. It doesn't mean that he's better than anyone else, and it doesn't mean anyone is better than him. Fact closed. So you should know that trading is a personal journey. There's no point trying to compete. You see someone profit, you need to feel bad. It doesn't make any sense, folks. It doesn't make any sense. You can be motivated, yeah, but it's a personal journey. And it's a journey you take on your own. You can't take a journey with someone else. It has to be only you, because your psychology, you are not going to, go on a psychological journey with someone else. So, and something you should note, trading is a journey to self-discovery. It's in trading that you know as if you're actually a fearful person, you actually know some painful truths about yourself. It's a journey to self-discovery, because you're going to, in fact, I'll leave this for Sunday's call, which is psychology and risk management. So it's a journey to self-discovery. It is in trading I knew that I was, fearful. In fact, in my early days of trading, man, I was so naive. Like once it just turned negative, I didn't know market structure. For entire time, I was over leverage. Once it got against me by minus half close, I'll enter again. All those things I was in. I knew that I was impatient. That was when I knew that I was impatient. When I started trading, I knew that I was impatient. Some people is doing trading like they know that you're actually greedy. You will not know you're greedy on start to trade. You know you're greedy. When your profit is in 1:3, but you want to hold it 1:10, and then it doesn't get it, then takes you out. And you know that you're actually greedy. So in trading, you're going to discover a lot of things, and most of these are usually ugly. You know that you have ugly truths about yourself. It's in this business that you have so many ugly things about yourself. That you're greedy, that you're selfish, that you're careless, that you're lazy. It's really going to know all these things. And the trick about that, when you know these things, what you do is to work on it. Don't try to cover it or try to justify yourself. Just try to improve on it, because no one is perfect and no one expects you to be perfect. All right. So trading is a journey to self-discovery. All right, I think we should close up this first section of this code so we can go over to market structure. All right. So if you guys learned one or two things in this code, just type value again in the group. Let us know that you got something from it. Just type value in the chat so people will know that you're actually getting something. All right. Just type value. All right, let's go. Shush. Let's go. Wow. Amazing. Value. Wow. Let's go. So now that being said, so we are able to reorient our mindsets about trading. Right? We have known that trading is not really what we think it will be. So it's not a gambling. Trading is not gambling, right? It's not gambling where you bring your 50 bet, 1x, all those things you guys do. I don't bet, so forgive me if I cannot really pronounce it correctly. Those 2x, x2, 1x2, all those things, not like that. You have to discover a lot of things about your trading journey, and you have to be okay with it. If you know you're greedy, fine. Just be self-aware, right? Whenever you discover something, don't try to defend it, don't try to cover it up. Just be aware of your faults and see how to, work on it. All right. So that being said, we can go to the meat, right? So let's take out all this and then we can go to the meat of this. Right, this is the day one, so that's time to lay down some foundations and all of that, right? So now, for those of you guys that are new, so just for your benefit, right? When I say forex, forex simply means foreign exchange, right? So forex trading means foreign exchange, right? That's foreign exchange. That's what it simply means. For those of you that don't know, it means foreign exchange, right? So it has to do with something that is not, it's when we talk about local exchange, exchanging maybe money for something like soap, detergents. But when it comes to financial markets, you're exchanging foreign things that are not in your local community, right? So you're exchanging this and all of that. So when it comes to forex trading, we are referring to foreign exchange is the mother word, right? So we have other forex trading. What we have what's called, we have currency pairs, but it's that actually makes up the foreign exchange market, right? We have currency, we have crypto, it's part of forex trading. So what like to Some people usually call currency known as forex, but that's not actually true. All these things are actually other foreign exchange because crypto. Have you ever seen Bitcoin before in your life? Have you seen Bitcoin, like physical Bitcoin before? So how it's not foreign? You that say that forex is not crypto. Have you ever seen crypto before? Have you touched Bitcoin like touch it and touch the coin? You haven't. So it's part of foreign exchange. Sometimes it's foreign to you, right? That's what they call indices. That's the Nasdaq, US 30, J 30. We have the stocks, right? We have stocks, something like First Bank stocks, UBA stocks, shares, all those stuff, stock and shares, right? Then we have what we call the synthetic indices. And this is actually this is where I actually cut my teeth. I cut my teeth in synthetic indices, meaning that cut my teeth simply means that is where I started. So I cut my teeth in synthetic indices. That's why I actually started my currency journey on synthetic indices. Then I moved back to currency. Currency, I trade on the currency. I trade on the currency, indices, and synthetic. I don't do stocks. I don't do crypto, right? So we have you have HFX, that's higher frequency forex. We have HFX, and now some of the things that you basically can trade. Let me just check. Let me check something quickly here. Let me check something. Yeah, we have futures, bonds. Yeah, futures and bonds. That's the thing I didn't mention. So we have futures and bonds, right? Futures, something like E-mini, S&P 500, those things that we have futures. Another thing that make up the financial market, we have what we call bonds, right? Government bonds. We have government stocks. Bonds are usually governmental stocks, right? So we have these are the things that make up the foreign exchange market, and these are the things that you can actually trade, right? So as a trader, I would usually recommend that you stick to maximum of 3 asset classes. That means there's no point trying to trade currency, crypto, indices, stocks, only you. Man, doesn't make any sense. So I feel that you could not pick 1, 2, and focus on them. So if you're trading currency, pick only currency. And maybe, for me, I trade more of currency and synthetic. But when I say opportunities, I take indices. So for me, majorly I focus on currency and synthetic, right? Then sometimes I see opportunities on indices, I also take it. I don't trade crypto, no, I don't trade stocks, I don't trade HFA, I don't trade crypto, I don't trade bonds, I don't really do all that. So I really focus on currency and synthetic. And sometimes indices, or sometimes I focus on currency and indices, and sometimes synthetic. So I actually swap between indices and synthetic, right? It depends on what I'm doing, right? So yeah. So you have to focus on one particular asset class, right? So you have to focus on one. Don't try to trade everything. So you have to master them too. Either you focus on currency, you focus on crypto, you focus on indices, and any of that, right? And the best part is that all these things have a similar way you trade them. The way I trade, I'm actually a smart money and algo trader. Like the way I trade, I can trade any of this. I can trade stocks, but I choose to limit myself to just synthetic indices and currency, just so I can focus, right? I can focus on, because currency markets have special functions. First of all, we have news, we have all those things that affect only currency, right? We don't have news on synthetic indices. So, and we have some things I use on currency, which I don't use on synthetic indices. So you have to just learn how to focus on few, so you can know the things you have to focus on, right? For instance, now we have bonds. Bonds have how they trade them, right? We have features, we have seasonalities when it comes to features. But we don't have seasonalities in synthetic indices. So you have to just focus on few to say you can know their specific functions and how to leverage of them, right? So you have to just focus on that. So now, knowing as we have all this on the forex market, now, how do you actually make money from this? So the simplest definition of this is that you make money when you buy a market and the price goes up. Let us use something that we can relate to, right? So let's assume that you actually are a market trader, right? And maybe you sell iPhones, right? You sell iPhones, right? You sell iPhones, and then you bought the iPhone, right? You bought it, right? You bought it, you purchased it at, you bought the iPhone at $1,000, right? And then the price of iPhone now goes up in the market, and then you now hear that, okay, iPhone price is now $1,500, right? So now this is what is also applies to the financial market, right? So when you buy the iPhone at 1,000 and the price goes to 1,500. Now you can sell it at 1,500 and make profits. So in the financial market, you make money when you buy something at a low price and the price goes up. That is how you make money in the financial market. That is the two most important indicators in the financial market. It's what they call time and price. So these are the two things they focus on. Focus on what? Time and price. What do you mean by time? You want to be buying the market when the price is favorable. So when you bought the iPhone at maybe you bought it on by December, and during that time period, the price was at $1,000, and now it's actually at 1,500. So that's how you make profit. So when you buy low and the price goes up, that's how you make profit in the financial market, regardless of what you're trading, whether HFX, bonds, futures, whatever. Even if you go and create your own platform and trade it, that's how you make money. You buy when the thing is low, you make money. You want to buy when it is low and sell when it is high. So if you bought this at this price and you sell it here, that is how you make profit. But assuming that you bought this iPhone when it was $1,000 and the price now does what? Drops to 800. Have you made profit? No. Because why? The price has gone was below what you bought it. Profit is just the definition of how you make money in the share market. So you want to time the market to buy at a price that is favorable, and then you want to see price go up in your direction. So you make a loss in the financial market when you buy a particular asset class at a price and it goes below. Then you are what you call a losing trade or a losing transaction, all right? But when the price goes up, you have what you call a win, right? So you win, like for instance, now you guys can see the trade I actually caught on GU just some moments ago, right? You can see the trade. Let me just post it in the group so you guys can see it, right? You must post it. Now these are the trade. Let me just select it and post so you guys can see it. That you guys can understand what I'm talking about, right? So select forward to forward it to the group, right? So bootcamp. So you guys can take a look at this, the trade I caught today, right? So you can see that I bought when the market was low and I made the money because why? Price went higher, all right? So you can look at it at the group, right? So that's how you make money in the financial market. You want to be buying when the price is low. I want to see price go above, right? So you don't want to see price go. Then for a sell scenario, you want to be selling. Let's assume that you bought, let's assume that now you sold your iPhone now at, right? You bought it at 1,000 and you now sold it at 1,500, right? So let's just assume now that you bought the iPhone. Let us just use the same 1,000, right? Now you bought the iPhone at what? 1,000, right? And then let us know that you sold it at 1,000. Maybe you have 15 iPhones, right? You have 15 iPhones and you just sell them at 1,000 each, right? $1,000 each. And then the price of this now drops to what? 500. Now, remember that you sold it at $1,000 and it now drops to 500. Now, you cannot buy, maybe you cannot restock your shop with what? This. Now, remember you had 15 iPhones, right? And you sold it at $1,000, right? And now the price now drops at what? Now drops to 500. Now, remember you sold your iPhone when it was 1,000, right? You sold 15 of it. Now, if the price drops, you have actually made profit because you sold at a price higher than what you're going to do what? Buy it again. So if you now buy again, you now buy at a cheaper price because why? You sold what you had at a higher price. So you make money in the financial market when you sell and the price goes lower. But let's assume that you sold this market and now you sold all your iPhones for $1,000 and then the price now goes to 1,500. Have you made profit? Because you sold it at 1,000 and our price has gone above what you sold it. You're going to obviously have to go and borrow to buy more. You have to go and borrow maybe money to go and, it's actually at a loss because you have to pay the interest, so and all of that. So you make a loss when price goes above where you bought, where you sold. So the same thing. So when you lose a trade, it's simply when you sold at a price that was higher than, price goes higher than what you sold. That's just how you make money from the financial market. Just to you make money from buying and selling, right? So if you guys understood that, just type buy low, sell high. So this is how you want to make money. So you want to buy low when the market price is low and sell when it is high. So just type this in the chat: buy low, sell high. But that's not in the chat. Buy low, sell high. Let's see if you get the following in this score. Type it in the chat. Buy low, sell high. Buy low, sell high. Let us see if you get the following on this score. Let's just type buy low, sell high. Buy low, sell high. Or is it kind of no? It's kind of story. Let me just wait a bit. Then will come up a bit. Because I think that you guys can hear me. I think it's on Telegram app, right? So you make money when you buy low and you sell high. All right. So that being said, like I said earlier, financial markets, I would usually recommend you the forex trading. Start with this. Why? Because it is looking at news, all those fun stuff, right? So if you're new to trading, or start with synthetic indices. Leave forex currency, crypto, all these are people like are advanced, right? They are actually for a while. All right, so I would usually advise the financial markets, right? Always start with the synthetic indices. That's what test. You want to get good, start with synthetic indices. So if you're just new, you want to master market structure, you want to master all those funds. Right, just give me a moment. Let me get my phone close to me so that I'm seeing. Let me bring up my phone. All right. Man, all right. Think my is done. Let me see. Let me check. All right. If you can hear me, just type I can hear you in the chat. You guys can hear me, just type I can hear you on the chat. So I'm actually watching the chat now. Just like I can hear you on the chat. So I can know you guys can hear me. So I can continue. I think my Telegram app is having issues. Just like I can hear you on the chat. All right. Let's go. So, like I was saying, you make money when you buy low, sell high. So always have in mind. So this is why I have an issue with breakout artists. I don't know what my mentor calls it ICT. He calls them breakout artists. That people that trade this way. Like my market is kind of creating a kind of support level, right? They'll be like, if the market breaks above They retest, right? They'll draw their support level and they'll be like, the market breaks above, we just buy the retest. You know that if you're doing this, you're actually buying high. This is why I have an issue with this kind of trading, because the way to make money in the financial market is buying low. But when you're a breakout artist, right, you're buying high. You're buying when the market is high. And usually, I have seen this happen. Usually, market is like this, do like this. You want small rejection, then jump low, and then finally do what? Buy. So if you are actually in this boot camp, I urge you, delete this kind of trading for your mind. Just take it off your strategy quickly, because I've just explained to you that the way you make money from the market is when you buy low and high when you sell high. Not when you're buying, when the market is high, you're buying. It doesn't make any sense. When they will see a weekly, oh, jeez. God will help us. All right. So for new traders, I usually recommend that you start with synthetic indices. If you're not profitable, you're still struggling, start with static indices. Right? Don't go and be burdening yourself with futures and all those stuff, right? So if you're new, right? I don't say if you're new, start with static indices. And as you progress, you're gonna move on to currency, because currency has to do with fundamentals, relative analysis, correlative analysis, all those fun stuff, right? So now let us now dig into the meat, right? This bootcamp is over. Let's go into the meat. When you have a pot of meal, right? Let's assume that you cook a chicken, right? You usually see a plate with different parts, right? You usually see the leg, the neck, the head, all those parts. But what I'm giving you, I'm just going to the flesh. I'm giving you the meat. So I'm not giving you the whole chicken, right? I'm going and giving you the meat. So I'm not speaking out the fleshy part of trading. I'm just giving you the meat, like the main part, that's the lap, all those. That's what I'm doing for you. This bootcamp is basically about breaking polygons, and to break polygons effectively, you have to go to the main point and bring it out. So I'm not going to the main point. I'm not teaching forex trading, who did financial markets, all those. I'm not teaching all that. You can go to my 2022 bootcamp to have a knowledge of all that. I've done that before. So what I'm not speaking of the meat, I'm just giving you guys the meat, right? So let's go. So now, essentials to market structure. This is where we make money. Now, like I said earlier, the two most important things in your trading is time and price. So now, when we talk about market structure, for me, I'm referring to two things. I'm referring to what? The candles and price levels. When I'm talking about market structure, I'm referring to what? Two things: the candles and what? The price levels. I just look at that's what I'm looking at. Just the candles and price. That is what I feel is the whole brass tacks about market structure. So if you prefer, let's say okay, let us change this. Let us say the charts. Yeah, the charts and the price. That's what make market structure. So now you have what candles, you have line charts, bar charts, whatever. Whereas holo sineki, I can't pronounce that stuff, right? Candle, line chart, etc. For me, I usually use candles, right? So line chart, etc. That is heli sineki. Something like that. Let me just check it. What's the other candle again? Hekinashi. Yeah, it's a kind of chart. Hekinashi. I don't pronounce stuff. We have point and finger. We have kaiji. We have different kinds of charts. But for me, I use candles and line chart only. So when I'm referring to market structure, I'm talking about candles and price levels. Now, the same way that in your human body, we have what makes up your skeletal system, which is basically what makes up your structure is your bone. That is your skeletal system, and then your flesh, your the water in your body, the fluids, the tissues, and what makes up your body. Right. So when it comes to financial markets, we have what we call the structure of the market, and the structure of the market is the charts and the price levels, and those are the two indicators that you should be looking at. Then if you combine the price, then you're on your way to a lot of good stuff. All right. So now understanding that, we can now go to the myths, right? So we have basically three kinds of market structure, right? There's only four. But for me, I recognize three because I don't see the fourth one, which is the trend market. Like we have what we call the uptrend. So we have what we call the downtrend. Also what's called the range. So in uptrend, we actually call it what we call a bullish. So bullish markets. It's actually what we call a bullish market, right? We actually call what we call a bearish market, right? It's bearish. And then the range also called a consolidation. So they call a range or a consolidating market, right? In a spot, right? So now, why do they call this bullish? Why do they call it bearish? You know, the reason why they call it bullish, right, is because when you see a bull, right, a bull is actually a male cow, right, or a male ox. So if you see a bull, the way it attacks with its horn in an upwards way. So let's say this is the horn of the cow, right? This is the horn of the cow. This is the horn of the cow, right? If it wants to strike you, it actually strikes in what? An upward direction. This is how a bull actually strikes. It bends its horn down and then strikes you in the upward. That's what they call a bullish market. So a bull actually strikes with its horn and what? In an upward manner. So a bull usually bends and then strikes you in an upward manner. But for a bear usually strikes. This is the bear paw. That's the hand, right? This is the hand of the bear, right? These are the fingers, you know, the fingers of the bear. It actually strikes in a downwards manner. So a bear strikes like this. It usually stands up on its 2 feet and then it hits you downwards. That's why it's called a bearish market. So just use this to know. The reason why it's called a bearish market is because a bull strikes upwards while a bear strikes downwards. So it lifts its hand up and strikes you downwards. That's why they call it bullish and bearish market. So for those who don't know, they have learned something new today. Right? So let's go. So now, let's go. Shush. This score is amazing already. Like this is what we call a bootcamp, right? A bootcamp. Right. Let's go. So now we have understood we have 3 kinds of markets, right? Some of you already know it. I won't have to start talking too much about it. So let's start with the uptrend. You know what an uptrend market looks like. If you're new, pay attention. So for the uptrend, usually it looks like, note, it takes a semblance of what I'm showing you. It is not actually what it looks like at 100%. A bullish market looks like this. Remember a bear strike, it goes upwards. So a bullish market relatively it goes upwards. And a bullish market you want to do is buy. So bullish market you want to buy. And now there are 2 things you should note in a bullish market. All right, in the bullish market we have what we call higher lows and higher highs. All right, so we have what we call the higher lows and the higher highs. So we have a higher low and a higher. So each low formed. So now this is where you actually learn a lot. Like you learn a lot here now. This is where main traders actually get it wrong. All right. So now in the bullish market, it has 2 parts. Major what we call the higher low and the what? The higher high. Right? This is what you see in an uptrend market or a bullish market. It usually goes up. And you want to be buying at higher low. Now, note 2 things. Note 2 things about a bullish market. Just take a note. Take note. Note. Now, okay, what did I do? Right. So notes. Number 1. A valid higher low must make a higher high. And the thing you must do that the lowest point before a higher high is a higher low. And the third one, a higher low must be higher than previous higher high. So, these are just things you have to just know. Previous. I'll explain this. This is where smart traders, this is where many people get it wrong. They just know higher high, higher low, higher high. They are making a mockery of themselves. Now, I'm just giving you guys the meat. Remember, this is a bootcamp to break it. I'm just giving you guys the meat. This is a recalibration bootcamp. I'm just giving you guys the meat of it. So, for a higher low to be valid, it must make a higher high. Right? I should add this too. Number 4, this is the thing you should note. A valid higher high must be above previous now it gets interesting. So now for a valid higher low, for this to call a higher low, it must make a new higher high. And a higher high, for it to be a new higher high, it must be above the previous higher high. Now let's take an example. If you see the market look like this, you see the market like this, higher high, higher low, and then it does this. Now, look at this chart carefully. Look at this. Now, based on our rules, a valid higher low must make us a higher high. Now, look at this. Did this make a new higher high? Look at this market carefully. Did it make a new higher high? That means the price, did this high go above the previous high? Just type it in the group. Yes or no? Did this make a new higher high? Yes or no? Did it make a new higher high? This is where you guys actually get it wrong sometimes. Did this make a new higher high? No. Right, let's see more answers. Did this market make a new higher high? Based on what I've got to explain? No. Right. So that is it. That is where methods make a mistake. They will go and label this as what? They say, okay, they will say, wow, they will say higher, and they will say higher low, higher high. Wrong. A higher low must make a higher high before it's called a higher low, and that higher high must be above the previous higher low. Look at this. The high must be above what the previous one before it can be called a higher high. Like, look at this chart now. This is not a higher high until price goes above the previous higher high. And know that a very higher high must be above what the previous higher high. And now, before you can call this a higher low, for now, this is not a higher low yet. This is not a higher low yet. Until what? It makes what? A new higher high. Then, and only then, can you call this was a higher what? Low. Sorry? Then, only then can you call it was a higher high. So, just take note of these 3 rules, these 4 rules I gave you guys. I want to save you guys from the havoc that the first mentors have given you guys. I'm the savior here, folks. So, the first mentors will not tell you this. They won't tell you that a higher high must. They won't give you this rule. They don't even want to be profitable. They want to keep depending on your saying. They won't tell you this. So I'm not telling you because I don't need your money. All right. So you need a higher low to make a new higher high before you can call it what a higher high. These are the rules. I'll take a screenshot of this. All right. So I'll take a screenshot of this. Yeah. So I'm going to create a gift for you people. All right. So I'll just send all these screenshots to you guys, like in a PDF format, so you guys can have a handout, right? It will actually be sent to your email after this call. So we're going to build a newsletter list so I can follow you guys up and all of that. So we're going to send all this screenshots, all this fun stuff, so you guys can have it in your journals. All right. So I'm going to send this all to you guys. So I've taken a screenshot of that. So we're going to send your email after the whole bootcamp, so you guys can have all these things, right? So you can have all of it, right? So now, you have known that for a bullish market. And now, the last scenario. If you have market looking at it, you say market do this. Which one, based on this rule, which one is the actual higher low here? Is it point A or point B? Type it in the group. I want this to be interactive. Which is the higher low here? Is it point A or point B? Which one is the correct higher low? Is it point A or B? Point A is the one at the left, and point B is the one at the right. Type it. Which one is the correct higher low here? Based on these rules I just gave you guys. All right, I can see point B. All right, keep typing. Let's go. Let's fire up in this call. Let's go. Shish. Let's go. What? Someone said A. Okay. All right. Mr. George, let us see your answer. What do you think it is, Mr. George? Is it A or B? Mr. Michael, is it A or B? Is it A or B? Mr. Sama John Ortega, is it A or B? I can see guys that are on the call. Yeah. They love it. Is it A or B? Mr. Ahmad, Jama Boy, Emmanuel, Pishola. Yeah, Oladuni. Sorry, I'm not Yoruba. I'm not pronouncing the name well. Sorry. I'm not Yoruba guy, so forgive me. All right. So the answer is actually B. Remember the rule that the lowest point is the higher low. So now between these 2 points, which one is lower? This. So point B is the higher low. Note that. So point B is your higher low. Capiche? Yeah. Capiche. Now we can move over to the second kind of market, which is called the downtrend market or the bearish market. So for a downtrend market, it's just a reverse. It looks like this. It goes downwards. And now the leveling on these are different, right? It has what we call the lower high, there's LH, and the lower low. So I can just keep knowing this. Yeah. Whatever. Yeah. Oh my God. What's happening here? Right, I was on the colony, sorry. So I have lower high and then the lower low. So here we have the lower low. So we have lower low here. I won't label everything, right? I won't label everything. So we have LL, lower low. So it's the lower low, lower than previous was low. All right, so I have our LL there. Oh my God, what's wrong with this video today? Are you mad? This is the EFX BOOTCAMP. All right, this is where we recalibrate people to function effectively. All right. So now we have the lower low. All right, so LL. Right now, on to something. The goal of trading is for you to learn all this. It's when you have learned all this, that's when you actually make money. You cannot make money without learning all this. You have to be humble and patient enough to learn all these things. It may look boring, you want to just get to where you can place trades, but this is the foundation, folks. Without this, you're not going to go anywhere and trade it. It's like medicine. You have to learn chemistry, organic chemistry, blah, 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 before you actually you have to go and learn anatomy, all those stuff, skeletal system, blah, 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 before you actually become a doctor. That's how you have to trading. So you have to learn all these boring stuffs. So now, the bearish market has similar rules, right? Yeah, it has similar rules. So I'm not simply it's easier for me to type it out. So now, the similar rules for a bearish market is this. Pay attention, folks. Pay attention. Now, I want to just edit this. Now, a valid lower high must make a lower low. Just the reverse. So it must make a lower low. A new lower low, rather. Yeah. Now, the highest point, just the reverse. I'll just type it out. Yeah. The highest point before a lower low is a lower high. But don't worry, if you don't get it at this point, you might need to watch this call again and again. And the lower high must be lower than the previous lower low. I'm not editing all this. Just the reverse. When you see low, you write high. When you see high, you write low. Yeah, lower low. LF. A valid lower high must be lower than previous lower low. What have I done? The lower high must be lower than previous. The lower high must. No, I made a mistake here. Let me just check carefully. Let me see. The higher low must be higher than previous. Oh, this was a mistake. Sorry. Than previous higher low. Sorry. Previous. That's why I was confused. Yeah, it was a mistake. Sorry. It was higher than previous higher low. Sorry, that was a mistake. It was a mistake. Sorry, folks. It was a mistake. So that's why I was confused. But I was like, what am I typing? I was really confused there. So back to what I was saying. So a lower high must be lower than what? Previous lower high. And a valid lower low must be below the previous lower low. Yeah. So I'm correct now. Yeah. So that's it. These are the rules for a bearish market. So I have to separate the rules so you can see it carefully. All right, so you guys can get. Jesus. Let's see the point is scatter. I want to kind of separate so you guys can get it. All right. So I'm going to separate this chart. This is where you guys will get. Right. Yeah. All right. So now, what do I mean? A valid lower high must do what? Make a lower low. The highest point before a lower high, before a lower low, is the lower high. That means the highest point that price got to before making a lower low is what we call the lower high. So if you still get something like this, look at this one like this, and then drop down. Remember the rule: the highest point that price got to before making the lower low. So this is now this is not your lower high. This is a lower high. It must be the highest point before price drops. That's a lower high. All right. Then a lower high must be lower than the previous one. It must be lower than the previous one. That means it must be below the previous one. That means the previous lower high, price should not go above it. Right? And when price goes above it, that is what we call a break of structure. So now just note this. So let me just take a screenshot of this as well. So note this. These are the rules you guys will have at the back of your mind. I will type the rules out so you guys will not have issues. So when it comes to assimilating the content, I'm not typing the rules out for you so you guys can easily get it. Right? I'm not typing the rules out, just taking a screenshot. So after they call, you submit your emails so you can put it in our email list. Right? This is called the Elektron FX official newsletter list, where you'll be getting official info from us, hot updates, follow-ups, and all those fun stuff, right? To be sent direct to your email. It's like even texting me direct to your email. So after the bootcamp, we're going to make provisions so you can get the PDF. So I'll make a PDF with all these rules and send it to you guys, right? I'll send the PDF to you guys. You guys can have a screenshot of all of this, so as it's not be difficult for you guys to, can go through your material and it'll be easy for you, right? So that's business. So now we have established what the bearish market looks like. Now we can look at the final one, which is what we call the range, right? So you can just delete all this now, just take this all out. So, let me see the extreme points in case I need to go back to something. So, what is the extreme points for this? Now, a range is usually what? You know what the range looks like? A range is when the market is bouncing between a zone. And the market is just up and down. It's not giving a clear, uptrend or downtrend. So, usually, you will find what we call a support or a roof. You can usually find a roof and a ground level at a range, right? Usually what we call a roof, it's usually called a roof, or so you usually find what we call the ground or support. So let's actually you have a ground or support level here. Then you will have the roof or resistance level. So you find a roof or resistance. All right, let's go. So we have a roof or resistance at the upper point of it, and then you see price typically doing what? Bouncing in between this range, like going up, going down. That's what's called a range market, right? And a rule of thumb is that you should avoid a range market. That is the best thing to do. It's best to avoid a range market because the markets can break down and then come back up, and then there are people that actually trade like this. They will buy the lower range, but as a smart manager, price sometimes it's not perfect. You see price, imagine you bought a market does us, goes this time, then comes back up. You are taking a loss. So my price is not even, so my price will just go above and still come back and, respect the range. So you see those wicked weeks, right? So this is what a range looks like. You see price bouncing up and down. It's not actually going up. It's not actually going down. It's just in a range. So the best thing to do is to stay away from this. So what did I say? In a range, you stay away. Type it in the group. I stay away from a range. Type it in the group. Stay away from a range. Just type in the group. That's the best thing to do in a range. Stay away from the markets because it could get ugly and ugly very fast. Type it in the group. Just type in the group. Stay away from ranges. Stay away from ranges. Just type in the group. Just see you guys are following. Stay away from ranges. Let's go. Let's get this place hot, right? Shush. Stay away from ranges. Let us see. All right, let's go. Let's see your head. Let's see your response. One person has type. I stay away from range. Right, let's go. Stay away from a range. Let's go. Shush. Let's go. I love your energy. The energy is something else. I love the energy here. I really love the energy. You guys are amazing. All right, stay away from ranges. Don't try to change support and resistance. That is bullshit in my experience. Support and resistance, that shit does not work. I'm teaching you guys smart money, support and resistance tomorrow. I'm teaching you guys the kind of support and resistance you're looking at, not this. Don't trade ranges. It's one of the worst things you could be doing as a financial market trader. All right, let's go. All right, go and check all the facts. After this bootcamp, go and check all the YouTube channels you will see. You will not see anybody that will break down market structure like this. I don't believe that there's anybody that will be able to break down market structure and give you guys the meat like this way. Like just type shout out to Elektron FX Academy. Just type it out. Shout out to Elektron Academy. Just shout out to Elektron Academy. Just type it. Let us know if you guys are really enjoying this one. Just type shout out to Elektron FX Academy. I don't think there's anyone that can break down market structure this way. No, I don't think there's anyone that can do it. I'm not going to sound my trumpet, but I don't think anyone can do it this way. Make it so easy for you guys to understand. Just like shout out to Elektron FX Academy. This is actually an academy that's been running for close to 2 years now, and that's been amazing. We have a lot of results, and shush, let's go. Wow, amazing. I love you guys' energy. I love great guys with tight. No, it's amazing. I love the energy here. I love the energy. Shush, let's go. All right. So now, let us look for this. It's not about blah, 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 blah. Let us look for this on real charts. So we head over to real charts now. Let us identify bullish, bearish, blah, blah, blah. So simply down to maybe a 2-hour time frame. All right. This is the British pounds against the Australian dollar. All right. So I'll go to auto now and look for it. So we'll just quickly look for those kinds of markets, right? So now I think GA has officially graced us with a bearish market. That is the first thing it graced us with here. I can obviously see a bearish market, very bearish. All right. Let's go. Shout out. Let's go. It's amazing to have you guys on this. I'm so grateful for this opportunity, right? Time is one of the most important units of someone's destiny, right? Giving you guys my time, your time, sorry. It's amazing, folks. What is this? So look at this carefully. What do we have here? Because so what's market looking like? A bearish market. So you can see that the market was making a series of, you can see here, lower high, lower low, lower high, lower low, lower high, and then lower low. So that was the bearish market looks like, all right? So basically what the bearish market looks like. Then for a bullish market, I just wish that this guy will allow me to scrub in. I don't know why it's just centering around there. I don't know what I've drawn. This is actually a bearish market from a live chart. This is actually the British pounds against the Australian dollar. All right. This is actually a British pounds against the Australian dollar. Let's see if we can give us some more information. So this is actually a bearish market. So this session was a bearish market at this point here. Right, sorry, bearish market at this point. Yeah, bullish. Just note something that is not perfect. Right, I just give you what it looks like. A bullish market cannot be perfectly, perfectly looking like this. It can't be perfect, folks. Maybe tomorrow we'll talk. You know why tomorrow when we go into smart money concepts. This call is. What have I done? What have I done? Did I do anything wrong? Right. So bullish market, I can see it obviously here. We have bullish markets obviously at this point. You can see market is doing what? I see higher high. You can see it's doing what? Higher low, higher high, higher low, higher high, and you can see a bullish market at this point here. Then I can see a range here. See a range here. You can see the roof. Look at the roof right here. See the roof there. You can see the roof, and then I can see the ground level. Right? What have I done? Okay. So let me also reduce this a bit. So that's the roof or the resistance level, and then we have what we call the support level. Right? So we have the support level there. And sell price was bouncing up. That's what we call a range, right? So in the market, the best stay out. This market was bouncing up, finally broke up, and then stay up in the range market, folks. Always stay up. You don't see market going up or going down, range. Right? So like I said, it's not perfect. You guys, the market perfectly giving what? You know what I know. No, this market is sometimes it's weak above it, and I will explain why tomorrow. One more about 7%. But for this call, I don't know you guys understand that the market is looking like this, looking for what to buy. I want to buy the market comes down. So in this market, you want to buy the market comes down. So you want to buy here. Once the market comes down, you buy here. It comes down again, you buy here. You come down again, you buy here, and then you keep buying until it stops looking like this. Right? When it is selling, you do what? You sell when the market goes up. When it comes up again, you sell. It comes up again, you sell. So you want to be selling when the market is doing what? It's making its lower high, and then it's going down. So you want to catch price at a high price, and then want to drive price lower. All right? So that's basically what you want to do in the market. Right? And then the final part of this call is this part. Right? I want you guys to learn break of structure, right? So like I said, the market cannot be perfectly bullish or perfectly bearish, right? The markets usually change. Like you can say market was bullish, but at some point it became bearish. So what is the reason for this change? Why does the market change from bullish to bearish? What do I do? How do I know that this market is not going to be bullish anymore and it's going to become bearish? So how can I actually know that? That's what we call the break of structure. And that's what we wrapping this call up with, the break of structure. That is when the market stops being bullish and becomes bearish. All right. And when it stops being bearish and becomes what? Bullish. All right. So let's take out all these drawings and then we wrap up this call. We have already 1 hour and 30 minutes. Wow. This call is, jeez, I wonder you guys that this call will take time because we need to really recalibrate you guys, right? Some of you guys have been sold wrong courses, wrong information. That is why you struggle, right? Right information. The Bible says, so if you're not a Christian, forgive me, but I'm a Christian. The Bible says that my people perish because of lack of knowledge. So one of the reasons many guys struggle is because they lack right information. That is what this bootcamp is all about. I want to give you, market is about to close maybe in 1 hour time, right? So I want to give you right information, right? So a break of structure is simply when the market stops being bullish and gets back. So what do you see? In a bearish market, when the market is bearish, making sense of lower highs and lower lows. And remember the rule that for market to be bearish, it should not go above the last lower high. But if this happens, that is what we call a break of structure. And what we call a bullish break of structure. And it's denoted by what? A red arrow. What's also called a bullish break. So anytime the market goes above the last lower high, all right, it becomes what? A bullish break of structure. A bullish BOS, right? That's a bullish BOS. So what a bullish BOS. Whenever the market does this, what's it called? The market might want to do what? Start buying. So when you see this happen, what usually happens that the market does what begins to look what like this, begin to look what bullish. That's what happens when the market breaks structure for a bull. So when the market breaks structure, what we call an uptrend BOS or a bullish break of structure. So when the market does this, it starts doing what? Looking bullish. All right? And then the best way to denote a BOS is with the close price of the market, not the wicks. Use the close price of the market to denote the BOS. So best way to denote a BOS is use the close price of the candle. So you want to use the close price of the candle, right, to denote the BOS. So use the close price or use a line chart, because line chart is based off close prices, right? So why is it a close price? Because most of the volatility of a candle is actually at the open and close price. That is where most of the orders of the financial market rest. It rests at the open or close. That's why we use order blocks. That's why order blocks are respected at the open, because that is where a great deal of liquidity rests. So a great deal of liquidity rests at the close price of a candle. So when the market is able to break it and close above it, it must break and close above. You cannot see what a bullish BOS. So how what it looks like? It looks like this. I'm taking screenshots so that you guys can have a PDF on this. So you guys can just be, just be scrolling through the PDF, like they enjoying the whole, whatever. Like I'm not taking. I want to give you guys a PDF so that you guys can have a little handout, and it's available after the bootcamp. Right? Just submit an email to my newsletter, and then we'll post it to you so you can have this screenshot. Right? Now, we have what we call the bearish BOS. So for a bearish BOS, we assume that the market was what? It was bearish. It was selling, right? So it was bullish. Sorry, so the market was it was bullish. It was buying, making sense of higher highs and higher lows, and then market does what? It now remember the rule that price should not go above the last higher low. So when that happens and it goes below it, that's what we call a break of structure, a bearish break of structure, and it is denoted with what we call the arrow. A red arrow. I want to see markets close below it. All right. So you can text it here. Bearish BOS. All right. So bearish break of structure. All right. So your bearish break of structure. So the market does this. Usually the market stops being bullish, and then it does what? It starts becoming what? Bearish. So when you see this happen, it simply means that it's time to stop buying the market and it's time to start selling the market. When you see this bullish one, it's time to stop selling the market and it's time to start buying the market. All right. So this is what a break of structure looks like for the both case scenarios. All right. And this is where we'll be wrapping up this call. We don't take too much time, so you can rest and prepare for tomorrow's call. Because tomorrow we're going to go into smart money concept. And that is actually my trading strategy. Right, I'm a smart money trader and a bit of I'm actually an algorithm trader. Basically, I'm an algorithm trader and all of that, right? So that being said, I need you guys to do one thing for me, right? And that will be the assignment of this call. All right. I'm going to post it now so you guys can see the assignment. I have an assignment of this course. You guys can do it, right? And then submit it before tomorrow call, right? I'm not going to show you guys example of BOS. That's why I want you guys. Show you guys type of trend. I want you guys to go to the chat and look for it. Right? So I'm going to just show you guys the assignment and the task. Right? Remember that trading has to do with action, right? So you have to give yourself to study. So I want you guys to take this assignment, right? Take this assignment. Take this assignment. I want to just share my screen so you guys can see the assignment. So I'll share my screen now. So this is the assignment now. I want you guys all of you to do it. It's actually a very beautiful assignment. It's not going to take much of your time and all of that, right? So these assignments. All right. So the assignments is actually 3. The task number 1. I've told you guys, if you're still a beginner, start with a synthetic indices account, right? So we are going to create a synthetic indices account with a link I will send to the group. And the number two thing, identify the three kinds of financial markets. So that means use your chart, go to your synthetic indices account, identify a bullish market, identify a bearish market, identify a ranging market, and then the final one, identify a bullish break of structure and a bearish break of structure. That should not be too difficult. So go just create an account with the link I'll be giving, then do these three things and post it in the group for us to see. All right. So this is basically going to be the end of this today one. All right. If you are really blessed by this call, I would like you guys to type some ones in the group. Just type some one. Just type 1 if you really learned something. So we're about to wrap up now. Don't forget to do the assignment. So type some ones in the group because this is the recalibration bootcamp, Elektron FX bootcamp of the year. Let's go. Let's see some ones. Let's go. 1. Let me even type some ones. Me, I also learned. I need to type some ones here. Yeah, I learned something. Ones. Let's spam the group with some ones. Let's go. Shush. Let's go. All right. So to have a call up, I want to say this. You can actually be very wealthy in the financial market. Right? This is the only, in fact, forex trading is the only profession where you don't need to have a godfather. You don't need to know anybody at the top. You can make your ends meet from the comfort of your room. If only you're willing to do what it takes. And what does it take? Give yourself time and put in your efforts. All right? So say no to signal services. Say no to copy trading. Say no to all those shortcuts. Pay the price, folks, and you will see the results. You're going to be as wealthy as you can imagine. Like you're going to be so wealthy that you will not know what's happening. If and only if you can listen to this, as I'm telling you. Don't, if you impossible, go and unfollow all those signal services. Stop all those things, folks. You're not going to profitable that way. ICT have been trading for 30 years, and he said that in all his years of trading, he has never seen a trader that has been consistently profitable depending on a signal service or a trade copier. Never. Even me, I've never seen one. They end up blowing their accounts. Consistent profitability is being able to make money 1 year, 2 years, 3 years, 5 years, 10 years. It's not just 1 month's profit, right? So this is going to be the end of this video call. I want to go and eat and do something else. If you guys really enjoyed this call, please do the assignments and see you guys in it. Right? The recording, they are available on YouTube, right? We'll post the recording on YouTube, right? After all the calls, right? So I hope this call was insightful. I see you guys tomorrow, same time, same venue. Do well to add your friends because it's selfish if you're in this and feel like giving, all right? So you guys should hop on for tomorrow call, and that is also cheers and God bless.